From where you sit today, as you think about the big trends around, Proptech, what are the ones that excite you the most?
It's cliche, but certainly generative AI is proving tremendously impactful. If you look at the real estate industry, we are a labor-constrained industry, right? For every 2 plumbers who exit the workforce, there's only 1 Homo sapien plumber available to take that person's place. For every 2 property managers who exit, there's only 1.5 property managers to replace that. The labor churn is just tremendous. So generative AI fits really, really nicely because I've never called a property manager on the phone, a human one, to tell them they're doing a great job. I usually call them when my toilet's broken or there's a window, right? Like these people, that's why there's tremendous churn in our industry. People burn out really quickly. One of the benefits of AI is they don't burn out. If you are rude to it over a text exchange, it doesn't take it personally and bring it home and languish and go look for another job. It is squarely doing this job, whether you're nice to it or mean to it. So that's one major component. So generative AI, we're just scratching the surface of its capabilities with respect to all types of real estate tasks, whether it's underwriting a mortgage, communicating with a mortgage borrower, whether it's leasing an apartment, whether it's communicating with an existing tenant over property management or facilities management issues. Another category that was just a promise a few years ago and is now in active deployment is robotics. We remain tremendously optimistic about the future of robotics for performing basic skilled trades on the job site. Robots who can paint walls, robots who can put down grouting and tiling. I mean, imagine a crane operator who doesn't have to sit 200 feet in the air in a crane in the freezing cold. Instead, they can sit in some control command center in your office and they can manage 6 cranes at once. I mean, we're gonna see an explosion of productivity due to technologies like telematics, robotics, and then if you combine that with AI, it's going to be tremendously impactful. So we're looking at a lot of that. One of the earliest successes in Proptech was data efficiency, cleanliness. I think you're seeing an approach where we're finally close to people getting control of their data and leveraging it to improve our world and the real estate ecosystem. There are millions of homes right now that are fundamentally unaffordable because they're uninsurable. And they're uninsurable not because there's something wrong with the property, but because the insurance companies don't have enough accurate data to underwrite an insurance policy. So they're just deciding to not underwrite anything. We view that system as fundamentally broken. And so a lot of the businesses we've always looked at and will continue to look at are businesses that help to make data more efficient, ingest it, make sense of it, and deliver it to the customer so the customer can do their job. Because we have still this massive housing affordability issue. Home sales are at record highs despite virtually no liquidity in the market. Millions of homes are completely uninsurable. And that's fundamentally, we're going to continue to invest in data platform.
A lot of what I think Fifth Wall does and MetaProp does is we kind of act as this interface layer to say you have these big systemic technology changes. Real estate's this weird, idiosyncratic, archaic industry. Let's be the translator to build applications and invest in applications that allow the real estate industry to adopt these new things. But then there's a whole nother dimension to PropTech, which is I feel like where it gets fuzzy around the capital intensity of real estate and really the evolution of entirely new asset classes unto themselves. What do you think is next around kind of this PropCo, OpCo, new real estate operating businesses? What's coming on the horizon? And I guess a related question is, do you think that is PropTech, or do you think that will ever be seen as PropTech? Because I think today, in the aftermath of the failures of WeWork and companies like that, everyone in venture is so scared to do anything capital intensive. Where do you think new property types will emerge from the venture ecosystem?
It's a great question. I think one of the developments that I view as very positive over the past few years is we've seen financiers step up who understand the category, building specific project finance vehicles, whether they be funds or on the debt and equity side, to say, we're not going to look at traditional real estate. There's already debt and equity available for that. We're not venture capitalists either. We're not going to invest in operating businesses, but we're going to come in and we're going to invest at the asset level. And if you as an operator, if you're tech-enabled operator, can show me that you have more efficiency because of your deployment, proprietary technology, we are willing to finance all of your projects. And so we have companies, whether they be hardware companies, technology-enabled lending companies, that are now, instead of going to us or Fifth Wall and saying, we're doing a $10 million equity round, but 8 million of it is gonna go into the asset or go into lending, which, as we know, it's very hard to get a 100x return on that for what the VC is looking for. We're gonna go to a specific fund or group that's set up to finance these projects at the project level. And why are they doing it? Well, they're getting a higher yield than they would get investing in a traditional real estate project. They're there early, they demand it. And they also typically get equity in the operating business. So if the business is able to scale, they have a juice returns and they can keep their investors happy. So I don't necessarily see a new asset class within real estate emerging, but I see a new asset class within, or a new class within finance emerging. I think 10 years from today, just as we've seen massive growth of our sector, the built environment VC ecosystem, which didn't even really exist 10 years ago, and now I could rattle off 15 to 20 names just off the top of my head of firms that do it. I think you're gonna see a similar development in this propco opco project finance ecosystem, where now there's maybe 1 or 2 firms doing it. They're just starting out, they're going project by project. I think in 10 years, you're gonna see many different firms with significant amounts of capital, AUM, executing these types of deals on a regular basis. And I think you're gonna see a lot of financial services giants, industry incumbents, looking to get into it as well. So I think that will help with some of the issues associated with the mistakes that were made, effectively funding assets with very expensive venture capital equity, which doesn't work, or trying to fund the assets in a traditional real estate structure, which didn't really work either. The investors were used to cash on cash yield. They weren't comfortable taking that type of risk. They were only able to underwrite at the asset level. I think what these new firms are able to do is underwrite the business at the operating level, determine, okay, is this really innovation? Is this a tech-enabled service, and how much margin enhancement does that get them? And then they're able to underwrite the projects even before the projects are in front of them. Their risk profile sits somewhere between a VC risk profile and a traditional real estate investor risk profile, and their underwriting as well sits somewhere between it. I'm excited about that ecosystem to grow and develop, and hopefully work with a lot of those firms to help co-invest in our businesses.
I hope you're right. I mean, I feel like we've wanted to see this unique flavor of capital emerge and be pointed directly at our space, because we see so much opportunity to invest in these operating companies, but like you, we don't want to take hard asset risk and upside with venture dollars. And I think everyone learned the hard way the problems of doing that. But I think what's missing is kind of drawing an analogy to climate tech, where we invest a lot, is like there's this chasm where there's an absence of project finance and infrastructure capital that's chasing returns between, call it 12% to 20% max. And that is just starting to form. It's just starting to materialize in climate tech. But I feel like in real estate, we have yet to really see that ecosystem emerge. I really hope it does.
I think with respect to real estate asset types, I actually think the exact opposite of new asset types and classifications is emerging. I think real estate asset types are actually fusing together and merging. Like both of us make a lot of investments in retail technology over the years, right? If you look at a retail store today, what is it? Well, it's partially what a retail store used to be, where someone would cross over the threshold, had never been there, try on a button-down shirt, walk out of the store with it. The vast majority now of what happens in a retail store is not that. It's actually being used as a logistics center. If you look around Manhattan, there isn't enough real estate to put logistics centers for all these retailers where they can pick and pack boxes, where they can take returns of goods that are purchased online. They're not even purchased at the store. So most retailers are telling us, we're using these stores as mini micro logistics centers and using them as a brand and technology extension of our omnichannel presence. And that totally fuses what used to be thought of as logistics real estate, which is its own category, and retail real estate, which is its own category. Something similar has happened with multifamily and even residential real estate. Some of the most popular sort of focused on items in a real estate listing is the home office. This place, yeah, the bedrooms don't get any light and they're terrible, but look how amazing this home office is, right? With COVID, we saw an explosion of work from home. So the whole concept of the office is being rebranded as the workplace. You sort of work from everywhere, you sort of live from everywhere. So I'm seeing a fusion of the traditional office and the traditional multifamily asset type as well. And you're seeing that with the big REIT players. They're looking to diversify. You're seeing firms that traditionally only owned office getting into multifamily, for example.
Because they're realizing to some extent they're in competition with other asset classes they never saw themselves as being in competition with. Like you think about, okay, a consumer 30 years ago buying a toothbrush in a retail store. They're still buying the same toothbrush today, they're just very likely getting it from Amazon. So the underlying real estate footprint of conveying that toothbrush to that consumer is just very different. It's no longer flowing through a storefront, it's flowing through logistics centers and intermodal facilities. And I think today, we're gonna very quickly also confront a whole new replacement asset for knowledge workers. Like we're here in basically a gigantic urban office environment and we're all knowledge workers, right? So we're kind of using our brains to create value. Well, if you play out AI over a certain period of time, a lot of that knowledge is going to be created synthetically inside data centers. And so to some extent, data centers are in competition with the very square footage we're operating in today. And so I think more and more real estate owners are seeing themselves as in competition with other asset classes in a way they never did previously. And it's kind of opening their eyes up to the fact that real estate is this. It's kind of where we started the conversation. Like, why does it excite, you and me? It's like, I like it because it's sociological. It's like real estate is at its core, how do we use physical space to create the economy and create civilization? And technology is confusing all that. It's mixing everything up. And the result of that is office owners are like, darn, I'm actually in competition with data centers. And retail owners are like, darn, I'm actually in competition with logistics companies in a way that I never thought. And it's interesting to think about how that will play out over time because technology is the instigator of all of it. And I feel like both Fifth Wall and MetaProp are, always focused on the leading edge, the opcos, but it's the hard asset capital that will actually determine the outcomes.